All right. We are back on Tool Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Stacy Mitchell. And on our last segment here today, what we're going to be doing is we're going to be talking about an article that got published on the Inquirer last week from Mikhail Bond. Great reporter over there, by the way. I've had the pleasure of talking to her on the phone, doing a couple interviews. And this is something that people haven't been talking about, that there is a refinance fee that was assessed to any of the federally backed mortgages. It's getting dropped on August 1st. So if you're thinking about refinancing, this is great news because we're only, 4 or 5 days away here?
Yep.
So the basis of the fee, it was a 0.5% fee, which took effect in December and was meant to cover projected losses due to the pandemic, adding $1,000 or more to the average cost of refinancing, and that was for any refinance loan backed by Fannie Mae or Freddie Mac, and that is dropping off August 1st. I can't believe there hasn't been more press about this. So what do you think about this fee before we talked about the impact and everything else? I mean, I've got an opinion, but what do you think, Stacey?
I didn't even know there was this fee. So it was kind of like a secret, silent, like maneuver, I guess, to collect some extra funds there. Under the cover of projected losses due to the pandemic that may or may not happen. So I'm really glad that they're dropping this fee. I think it's going to open the doors for some of the borrowers who couldn't get, because of this fee, they couldn't get the qualification necessary to refinance. So I think it's great. Drop the fee, allow people to refinance so that they can save money, and it's going to be much better for the consumer, that's for sure.
Yeah, and if you look at what's going on with refinance, refinances have been down for the most part, mainly because rates just got so low, especially last year, and then this got instituted in December. The challenge I have for this is that Sandra Thompson, the agency's acting director, she said the elimination of the fee furthers FHFA's, that's the Federal Housing Finance Agency's priority of supporting affordable housing, while simultaneously protecting the safety and soundness of the government-sponsored enterprises. I mean, I would have liked to charge a fee for pandemic-related losses. I don't know about you. And, I mean,
right.
there was Greg McBride, who's the chief financial analyst at Bankrate, says it was ill-conceived, and they would, if you're refinancing a $300,000 loan, you'd lose $20 a month in savings, he said. And the justification of the fee when it was sprung on the market was that it was necessary to pay for the cost of forbearance and pandemic-related payment relief incurred by Fannie Mae and Freddie Mac. But the homeowners who got punished weren't the high-risk ones. They didn't need forbearance. They didn't need payment relief, and they were actually reducing their risk to the mortgage finance marketplace by reducing their rates and payments. So it's totally out of line with what Sandra Thompson says. They have a priority of supporting affordable housing. And maybe, it's on me for not knowing about it. I'm sure a lot of our lenders did, but to me, this is just, it doesn't pass the smell test. It's a bunch of nonsense, and I'm putting it nicely.
Yeah, it is a bunch of nonsense, and that's that unintended consequences where it hurt the people that weren't high risk. So they were the ones that were either eliminated and couldn't qualify because of the extra fee, or they were being charged the extra $20 a month potentially, or they would lose that. So yeah, I'm glad to see this go, and but I would like to know where that extra fee has been going towards, really.
Well, and it says here, and Greg McBride, obviously he's at Bankrate, chief financial analyst, knows what he's talking about. He says here that it was the justification was to pay for the cost of forbearance and payment relief. So basically it was, hey, you're going to pay for the people who decided they don't want to pay their loans. And unfortunately with forbearance, there's a lot of people that applied for it that didn't need it, and they just took advantage of the system, which is a bit of a challenge. So I'm not saying that that's, that there's some people that didn't need it. I mean, obviously there are, but I know for a fact there's a lot of data out there that people didn't need the forbearance and just said, hey, you know what, I'm going to stop working, I'm going to stop paying my bills. And that number's come down substantially. So it's unfortunate. Now, here's the silver lining. We just talked about how rates dropped below 3%. So I do see a huge opportunity here for people that wanted to refi and were on like the edge of affordability. Rates have come down half a point, not quite a half a point, but like a quarter of a point. And 65% of mortgage applications last week were refinances, according to the Mortgage Bankers Association. So if you were thinking about refinancing, I mean, this is a huge opportunity. Don't call your lender until April 1st or August 1st. Don't call them until the 1st.
Right.
Huge opportunity to get savings because of that retreat with rates. I mean, that's the one silver lining I do see here.
Yes, definitely. If you haven't done it yet, definitely get your refinance in. This might be the last opportunity to enjoy these low rates. So you definitely want to jump in, especially if they're alleviating this 0.5% fee. So again, August 1st, take advantage of it, refinance. I think it's a great opportunity.
Well, and this, seeing this happen, this tells us a couple things about what their outlook is for the market and for the economy post-pandemic. Because if they weren't removing the charging of this fee, that would tell me Fannie Mae and Freddie Mac are nervous about the direction of the economy and an economic rebound.
Correct.
Because rates are going to trend upward. And now there is a very good window of opportunity for people because of where rates have come in, that they have dropped. So this is good news for the economy in general, that you're seeing this pulled off. And right now, if you look at some of the data that's out there, less than 2% of Fannie Mae and Freddie Mac loans are in forbearance, and there's continued home price appreciation. And again, we talked about who has what kind of equity in their homes. According to House Canary, which is a valuation-focused real estate brokerage, they're saying 68% equity in current homes is the average nationwide. And we've got the Keeping Current Matters data, which says that, again, there's been a 19.6% equity increase through the first quarter. The average equity in mortgaged homes is $216,000, and 38.2% of homes have no mortgage at all. So there is some good news here in a lot of ways for those people that maybe want to refinance or want to lower their payments, and it's good news for the economy.
Yeah, definitely good news for the economy, that's for sure. But they're big numbers. 65% of mortgage applications were last week were refinances. That's a big number. And the 68% equity in the homes, that's the national average. I mean, that's really positive news. So I think for homeowners that haven't taken advantage of it, it's going to be really, really meaningful to your household budget. So definitely get on board, take advantage of it. Wait till August 1st. But you can definitely get into a lower rate that you probably won't have another opportunity to get into a rate this low.
100% agree there. So, I mean, this is, again, our obligation to get this news out there. So we got, 6-7 minutes left here. So what does this mean for the market? Right? Like, let's look at the outlook for the second half of the year. We're seeing a lot of these pandemic-related pieces of legislation falling by the wayside. So you're someone that's thinking about buying or selling, moving into the second half of the year. What's your advice to them when they say, hey, Stacey Mitchell, I want to buy and sell. What should I do? What's going on?
Well, I would meet with them, sit them down, and go over the whole process. So for them, I think it's a great opportunity. I really do. I think it's very positive for the market. It shows that the market is strong, and it's going to continue to be strong. So to me, I mean, that just presents, hope and positivity. And I think that if people have outgrown their home and they want to move up, definitely do it. Now is the time. You're going to get more house. It's going to be more affordable monthly for you to get into that bigger home at this point. And for those downsizing, take advantage. Sell that larger home that you have, get out of it, cash in on the equity, and get into something smaller. You're going to enjoy the benefit of all the equity you acquired in your home, and you're going to be able to get into something that you will have less maintenance, responsibility, and you'll be able to enjoy and get a little bit more freedom.
Well, and you have a great point there. And what this also means, too, is for the overall health of the economy. I think the people that are afraid this is going to be another housing bubble, this is going to be another pop here, there's going to be another crash to come, you wouldn't see government agencies dropping away for them to insulate themselves and pad revenue, because the pandemic was tough on a lot of folks. I mean, there's no question there. And you wouldn't see government agencies doing this if they didn't have confidence in the economy rebounding. We've already
Correct.
seen travel spending has been up. 4th of July travel was only 2% off of 2019 levels. That's how a lot of people make money. I mean, you look at these vacation towns and shore towns. That's one of the biggest places that make money. One of their biggest earning seasons is in the summer. So we're seeing that consumer spending's up. We're seeing that people are going to restaurants again. So, I mean, that discretionary spending is going to be beneficial for the economy. And the fact that rates have dropped to where they are, this is the last chance. I'm clear this is going to be it. I don't see rates coming back down below 3% once they get above that.
Right.
There's a little bit of Delta variant scare right now. That's the market
Right.
reaction. It happens every time, right?
Yes.
There's something that happens. So to me, this is really good news for the economy. And if you're worried about the market going the other direction, we've seen demand is still there. Inventory's up a little bit. That's not a bad thing. That's going to help a lot of people find a home. And it's going to help the sellers that have been on the fence about selling if and when inventory's bubbled up, which it already has. So all those things, plus the added, hey, my mortgage payment's going to be less and I can afford more. That's where a lot of the value is here. So I'm glad to see them eliminate this. Again, this is really good news overall for the economy. So, as we head into the second half of the year, Stacey, I mean, we're already, basically 1 month into to Q3. So when do you see mortgage rates going up? What are your predictions?
Probably, I would say more towards the end of the year. I think they're going to bump up again. It's definitely going to happen before the end of the year. I don't think in the next couple of months. I think we'll still enjoy these super low rates, but definitely before the end of the year, you're going to see that change.
Well, I agree there, and so I pulled up some of what the experts are saying because we're in agreement. But you look at a lot of experts that are out there. And I went to Next Advisor, which partners with Time Magazine. So what they talk about is that so far this year, rates have increased roughly 0.4%, according to Freddie Mac, and they could creep a little higher. And Realtor.com chief economist Danielle Hale says as the economic outlook strengthens, which is exactly what we're talking about here, thanks to progress against COVID-19, vaccines, stimulus from the government, it pushes up expectations for growth in the economy and inflation, which is going to drive the long-term bond rates higher. And as long-term Treasury bond rates, they're a key indicator for mortgage rates. The 10-year T-bill, so the 10-year Treasury yield, bottomed out last August in 2020 and has hovered between 1.5 and 1.7% since March. And rates have come back down a little bit while the bond yields have been rising since they were never properly priced during the crisis. So once we get back to that traditional relationship, we're going to see kind of a symbiotic relationship between bonds and mortgage rates. And that comes from Housing Wire, which is, again, like the mortgage expert. So when you see those long-term bond yields rise, it's going to drive mortgage rates higher. So that's what you want to look at if you're curious about when affordability is going to hit, when things are going to happen. So to me, that's going to be the lever that gets pulled here. And now that we get the economy working again, I'm clear we're going to see rates go up towards the end of the year as well. Because we're also in like a slower season right now. Seasonally, this is when things slow down before that fall market rush in September, October, November. So to me, you got like 4 weeks of opportunity here if you're a buyer, 4 weeks of opportunity if you're trying to lock in that lower rate, because I'm clear once Labor Day hits, we get into the school season, we're going to see rates jump up again.
Mm-hmm. Agreement.
All right. So on that note, what we're going to do here is if you need to reach us, email the show. It's info@tooltimeradio.com. You can follow us on Facebook, Tom Tool Sales Group. Stacey, how do people get in touch with you?
They can find me on Facebook, and they can find me on Instagram at Mitchco2.
I think it's 2 Mitchco.
2 Mitchco.
The number 2. See,
Yes,
I should have done that.
2.
That's great. We're going to put that right in the video here.
That's right
Stacey
here.
doesn't know her Instagram handle.
There
so
it is. There I am.
at the number 2 Mitchco on Instagram. I'm at TomTool3RD on Instagram. And again, we're with the Tom Tool Sales Group at RE/MAX Mainline. This is Tool Time Real Estate Radio on WWDB 860 AM.